Hello traders, welcome back to my channel. In today's video, I'm going to share with you 8 different strategies that you are going to love, and these strategies I'm going to explain them, each and every one of them, step by step, how you are going to utilize them. So pay close attention and try to grab each and every one of the strategies, because you will use them in your trading in different ways. This strategy is going to work on a 4 hours time frame, and if you can follow this will really work with people who has a patience to go with a long time frame, so that it's more or less like a swing trading. But I assure you that you are going to make a very good profit. All you need is patience, because most of the time it's not about how many trades you place in a day, but it ends up with how well are you able to make a profit from the market. And if you can use this strategy very successfully, you will be able to make a profit from the market. So without wasting much time, let's dive into it. So in today's training, I will be discussing 2 important indicators. One is a pro trading trend channel. This is the indicator which you have here on this chart. You see this indicator gives you red when you have this red, and the price is currently as it is here, showing below the channel. Then it means you are in a good direction for you to enter a sell trade. And also when you see here, when the price is above the channel and the cloud, and the color change green, then this is a very nice opportunity for you to target to go long. And also we'll be combining this strategy with pro trading trend direction. So because the trend direction gives us more confidence that the capacity of this trend at the moment is in a very stable position. So when we have this up, which is the pro trading trend channel, giving us the indication that price is currently in an uptrend or price is currently in an downtrend, then we look out for what we are getting from the pro trading direction. So if the pro trend direction is telling us that price is confirming with what is here, like what you can see on this chart, from here you see that at this point the price is currently above the channel and is above the cloud. Here you have the cloud and here you have the channel. Price is trading currently above the channel and also above the cloud. So this is an indication that you are currently in an uptrend. So once you are in an uptrend currently, as shown on the chart, then you go to the down part, which is the pro trading trend direction. You can see that the histogram has changed from down, which is red, to blue. So this is telling us that at this moment we have momentum for a buy trade. So once you have these two confirming, all you need is to open your buy trade. You might be wondering, how do you get this indicator? So the process of getting this indicator on your chart is very simple. Just go down to the description box below. You will see the 2 links for the indicator. So one of the link is the pro trading trend channel. Once you copy the link, paste it on your browser and click enter, it's going to open up like this. And once this open, you will see the button to add the indicator to your favorite. Click on this button, it will be added to your TradingView account. In the same vein, you copy the second link, which is for the pro trading trend direction, and paste on your browser also, and click enter. It will be open, and you will see also the same button to add it to your favorites. Once you have done this, you will have the 2 indicators directly added to your TradingView account. Come and click the indicator tab. You will see the 2 indicators added to your TradingView account. This is the easiest and the simplest way to add this to your TradingView account. And once you have it, one thing you do is you need to adjust your settings for the pro trading trend channel. So click on these settings here. You scroll down to this point, so where you have the channel and the golden cross. Once you select those two, you click OK, you will have the indicator exactly what I have on my chart now. So as this is done, I believe you are getting more from what we are sharing on this channel. So do help us to have more engagement by clicking on the like button, hit the notification bell, so that whenever we release a new video, you will be able to get it and can follow our strategy. So I will be explaining this in detail, so pay very close attention. Once you have these two indicators on your charts, the job is half done. Now we are going to understand how we use this to trade the market. First thing you need to wait is to make sure that the trend channel is in the direction of a buy or in the direction of a sell. When is it in the direction of a buy? When you have the price trading above the channel, as what you can see here. Currently at this point, this is the channel. You see here you have the channel. So this is what we call the channel. Once price is trading above the channel and also trading above the cloud, you can see there is a cloud which is forming, you can see. So once price is above the channel and also above the cloud, it means we are currently in an uptrend. Okay, so in the same vein, when you have a price below the channel and also below the cloud, it means we are currently in a downtrend. So what do we do when we are in an uptrend? So once you identify that price is above the channel and above the cloud, the next thing you do for you to enter the market is to understand what is the situation for your pro trading trend direction, which is this indicator down. When the color of this pro trading trend direction is red, it means it's telling you that this is currently in a sell territory. When the color is blue, it's telling you that this is currently in a buy territory. And what you need to be, what you need to have in order to trade the market is for you to wait to make sure that both of these are in the same direction. You have here the pro trading channel. The trend channel is giving you a direction that you are going to buy the market, and you also have the pro trading trend direction giving you signal that price is going up. This is the point at which you are going to open your trade. Once you get these two confirmation at this point, at this candle, at the close of this candle, you get this confirmation, both are showing positive. Then at the close of this candle, this is where you open your trade. And when you open your trade, your stop, when the cloud is below the channel, your stop loss will be at the cloud. Okay, you put it slightly below the cloud on the candle which gives you the signal. So this is where you are going to place your stop loss. Let me take this again. First thing you need to know is that you need to make sure that price is currently trading above the channel and above the cloud. This is step number one. Step number two, you need to make sure that the color of the pro trading trend direction is blue. Okay, as you can see on my chart. Once you have these two, it means you are currently having a clear buy signal. Once that candle which gives you this signal close, this is the point at which you are going to open a buy trade. And when you open the buy trade, your stop loss, if the cloud is below the channel, so your stop loss will be slightly below the cloud. If the cloud is above the channel, your stop loss should be slightly below the channel. So these two things you need to make sure that you have it at the back of your mind. Your take profit will be 3 times what you are risking. So if at this point you are risking 30 pips here, your take profit will be 90 pips. Okay, so you can see what we are doing here is very clear. At this point, you see this is where we place our stop loss, and you see we are targeting 1:3. So if we are risking at this point 20 pips, our target should be 60 pips. If you are risking at this point 50 pips, our target should be 150 pips. So this is how we handle the trade. And for a sell signal, what you need is to make sure that first you have the price trading below the cloud and also trading below the trend channel. So when you have these two, it means you are currently in a downtrend. Then what you need to do is to go down to your pro trading trend direction to make sure that the color change from blue to red. So this, once you get these two confirmation, you are fully ready to open a sell signal. This is the candle which gives us this signal. At the close of this candle, this is where you open your sell trade. And you can see at this point the channel is currently above the cloud, so your stop loss should be slightly above this channel. So if the cloud is above the channel, your stop loss should be slightly above the cloud. So this is what you do, and your take profit should be 3 times what you are risking. So if you are risking here again 20 pips at this point, your target here should be 60 pips. So at what point again can you enter exit your trade if your stop loss is not a hit or your take profit is not hit? When you get the color of this channel, which is red at this point, change from red to yellow. This is the point at which you exit your trade, and you monitor to see whether you are going to get a new signal. At this, you see here, our take profit has not been reached at this on this trade, but we get here that the color changed from green to yellow. So at this point, we exit this trade. Then we monitor again to see what is the next point to enter the market. In the same vein, you have here the indicator is giving you a signal for buy, okay, meeting the two conditions. You open and you see on this very particular candle, you get the yellow, okay, the color change from green to yellow. At this point, you exit your trade and you minimize your loss. So this is how you handle this. We are going to see more of these trades so you can get more familiar with this. You see here you get the price is currently trading below the channel and also below the cloud. So this is step number 1, telling us that currently we are in a downward trend. So this is only we are looking for opportunity to sell the market. Then we wait to see that the pro trading trend direction is giving us changing the color from blue to red. So at the close of this candle, which gives us this signal, you see this candle here was the one that generated the signal, okay. Once this candle closed, this is the point at which we are going to open our sell trade, and we place our stop loss because the channel is below the cloud, so we place our stop loss slightly on this cloud, okay. So our take profit is going to be 1:3. So if we are risking at this point here 100 pips, so our target should be 300 pips. So this strategy gives you opportunity to make a lot of profits, okay, because you have double confirmation. First confirmation you have here, second confirmation you have here, and your stop loss is very low. So when you win your trade, as you can see in these 4 trades which you have taken, we only made a small loss here, which is very small because we entered the market here, and this is the point where it gives us the signal to exit. Here we're able to make a small profit, and here we're able to make some reasonable profit. And you see at this point we're able to hit our target on this particular trade. We still check more. You see here, looking at our, considering our strategy, we have here that price is currently trading above the channel and also above the cloud. So this is step number 1. We know that currently we're in an uptrend. So here we come down to look here, we see that the color of this pro trading trend direction is blue. So we have full confirmation. We don't need to wait for anything. We open our buy trade here. Our stop loss should be slightly below this channel because the cloud is above the channel, and our take profit is going to be 1:3. So you see here our profit was hit, and we make a very good amount of money from this trade, which is like $1,750. So again we move, again we follow our strategy. You see at this point you have here the color change here from yellow again to green, which is giving us the right indication, and we have the price above the cloud and also above the channel. And we come down here, we see that the pro trading trend direction is telling us that we are still in a strong buy market. So at the close of this candle, which gives us the signal, we open our buy trade and our stop loss slightly below this channel. And you see we are targeting 1:3, and here we hit our profit. You see the same way we see here we have a signal at this point telling us that the price has already is trading above the channel and also above the cloud. So we open our buy trade, okay, and here we have this showing a blue. So we open our buy trade and our target is hit on this trade, so we make profit. Here again we have the same scenario, that the price is trading above the channel and above the cloud, and here we have this our pro trading trend direction is blue, so we open our buy trade and here we make another profit. Here we get the same signal, okay, for buy, but this did not really go before we close this at a break even. Here we get a signal when the color change from yellow to red, so telling us that price is currently trading below the channel and below the cloud. So this is indication that we are moving into a sell direction. So but here you can see at this point when this was given, we did not have any confirmation on the pro trading trend direction, but here we got confirmation on this candle that the pro trading trend direction has given us a sell signal. So at the close of this candle we open our sell trade, but this trade did not go our way, and we get a reversal, which means the color change from red to yellow. So we exit on this trade. We just incur a small loss. So I believe with this you are very clear with how you are going to use this strategy. Everything is pretty straightforward. All you need is to open this on a 4-hour time frame and follow it, have patience. Once you have the signal and you have the confirmation, this is a good opportunity for you to enter the market and place your stop loss, and make sure you are using the good risk reward ratio, which we are using here, so that when you make two good trades, you have already made a lot of money for the week, and you can be able to profit well from the market. So I believe you love this content. Share this with your friends, share this with your family, let them learn how to trade the market profitably. This strategy is something that when you understand it very well, it will make a very big difference in your trading career. Back to my channel. In today's video, I'm going to share with you another exciting trading strategy which you are going to enjoy. And this trading strategy is something that is very easy and very simple to follow. In this time, we'll be using one indicator, which is a component of 3 different algorithms combined together to make this powerful strategy. And with this, you have all components of our trading exercise being captured. You'll be able to determine the trend using the indicator, and you'll be able to understand the direction of the market and also the momentum of the market. So this is a very nice trading opportunity which you will understand and you'll be able to enjoy having this strategy as part of your trading tool. This strategy can work on indices. As you can see, this NVIDIA. The strategy can work very well on indices as well as on Forex. So it's something that if you understand how to apply this strategy, it will be very easy for you to use it in your trading journey. Here is AUDJPY. So you can see it's giving a good signal and very clear signal. This strategy will be using it on a higher time frame. So for today, I will be concentrating on 4-hour time frame. So this will work well with those who are planning for swing trading, or people who would like to trade the higher time frame in order to eliminate much of the noise. So this will work very well. But that does not mean that if you want to do it with scalping, you can also as well use it as a scalping strategy. But it's going to be, you will eliminate some part of the component of this strategy in order to use it as a scalper. But it will work very well as a scalping strategy, as you will get to understand very soon. If you enjoy this content which we are sharing on this channel, I will advise please smash the like button, hit the notification bell, so that once we drop a content, you will get to know about it, and you also help us to this content to reach more people by liking and commenting and sharing your feedback. Your feedback is very vital for us because it helps us to tailor down the content we are creating and be able to create more content for the future in order to help the community and help everyone. So without wasting much time, let's dive right into it. Once this indicator, you might be wondering how you add it to your chart. Just follow the steps below to add it to your chart. The link for this indicator is on the description box below. Just copy it. Once you have copied the link, paste it on your browser, just this way, and the indicator will load. Here you will see the option to add it to your chart. I've already added this indicator. All you need is just click here, then the button will be added to your TradingView account. So next thing you do on your TradingView account, you click on this button here, indicator. So you will see that indicator which you have added. Click on it and you will be able to add it to your chart. So let me start by explaining the component of these indicators and also be able to guide you on how you can use it in your trading. The red indicator which you see, the red color, is the 200-day moving average. The 200-day moving average is the part of this trading strategy which will help us to understand the direction of the trend. So what we are looking at is to get this 9-day exponential moving average to cross the 200-day moving average, giving us this vertical cross. And this is an indication from this point that we are currently moved from uptrend to a downtrend. So the moment we are now in a downtrend, we need to know that we don't have to do anything like taking a buy signal because we are currently in a downtrend. And this gives us a clear biased mind on which direction of the market we need to focus. So from the point once you have your downtrend, all you need is to focus only on selling the market. In the same vein, here you can see the color here of the vertical is green, which is giving us a buy, okay, signal here. And from this point, it means that the indicator, the 200-day moving average, has been broken by 9, which is giving us an upward trend. So from here, we know that we are currently in an upward trend. And everything we do from this direction will be only to buy the market. We don't do any selling from this point. Only at this point, what we do is to buy the market. So now let's see how we trade using this strategy. So what you see, these dotted line, these are parabolic SAR component of this indicator. So once we get our directional bias, which is given us by this 200-day moving average, Once price is trading above the 200-day moving average, we know that we are currently in an uptrend, and we have these triangular arrows pointing green and going to the upward direction consistently. So the first thing we look out for is this first time when this parabolic SAR is here. We don't take any trade because this was the point when we confirm the trend. So from this point, we are looking for a new signal from the parabolic SAR. So here we got a new signal from the parabolic SAR. So at the close of this candle, this is when we open our buy trade, and our stop loss is at this parabolic SAR. We use the parabolic SAR to set our stop, and our take profit is 1.5 of our risk. So if we are risking here 10 pips, so here we'll be targeting 15 pips. So, and one area, once our target is hit, we exit the trade. Another reason, another areas where we exit the trade is when we have the parabolic SAR direction is changed. This is an opportunity for us to exit the market. Like what you can see here, we enter this market. At this market, we break even because the parabolic SAR change direction here. So as this direction is changed at this point, we have to exit our trade and wait for another signal. So here again, you have another signal generated by parabolic SAR. At the close of this candle, you open your trade and you place your stop loss here. As this trade is moving in our favor, we'll be trailing our stop. At every particular point, we'll be trailing our stop using the parabolic SAR. And once our take profit is hit, we exit the trade and we wait for another signal. Here again, you see we get another buy signal at this point. The close of this candle, we open our buy trade and we place our stop loss here on this first parabolic SAR, which gives us the signal, and we wait. We continue to trail our stop, and here we get an opposite signal from the parabolic SAR. Here we exit the trade, and immediately we get another buy trade here, and we open our buy trade, place our stop loss here. We have to maintain this, and our target is 1 to 1.5 because we are risking 1% in order to make 1.5%. So here we hit our target as well on this trade. Here again, you get a signal here. You place your trade at this point, and here is the target, and we put our stop loss here. We use the parabolic SAR to trail our stop, and you see here our trade was stopped out at this point with our trailing stop. So we stop at this very particular point. Now we are getting a downward signal. So here is the point when we get the bias change from upward to downward. So from here, we are no longer looking for buy opportunity. We are only looking for opportunity to sell the market. So let me show you how you can take a sell opportunity. You see this parabolic SAR, which gives us, which came to the point where we get our change of direction. We are not taking any trade from this point. So we wait. Here we get opposite signal, which is not in favor with the trend. So this is the point when we get the correct signal. So once we get this parabolic SAR give us signal here at the close of this candle, this is when we open our sell trade and we place our stop loss at this parabolic SAR. We use the parabolic SAR to trail our stop, and our target is 1 to 1.5. So if our here is our stop loss, which is 20, so here we'll be targeting 30 pips at this point because we are using ratio 1 to 1.5. Okay, this is our strategy. So you see here again, you get another signal here, which you are going to take. Once this signal is generated, you place your stop loss here, and you open your sell signal here. Your target is 1 to 1.5, and here we win on this trade. This, remember, we are trading a 4-hour time frame, so we are making a very good profit from the market. Here again, we get another signal here, giving us a sell trade, and here is our stop loss, here is our take profit, and you can see this trade will also make a very nice profit. So this is how you can use this trading strategy to be able to make good profit from the market. It's very simple. We made it as simple as anything. So I believe you will enjoy this strategy. Leave a comment in the comment box below. Let us know how you feel about this strategy, and we'll be able to help you. In case if you need anything, you have any concern, send it on the comment, and we'll be able to guide you accordingly. I wish you happy trading. In today's video, I'm going to show you another exciting trading strategy which will help you to manage your portfolio. And this strategy is a very nice strategy which helps in portfolio management. If you are also not a portfolio trader, you can also use this for your day trading. It will really help you in your trading journey. The strategy will cover how to use the indicators which we are going to be using. One of the indicators is our pro trading trend direction, and the second indicator is our pro trading oscillator. So these are two indicators we are going to be combining in order to formulate this strategy, and it will make your trading really simple and straightforward. The strategy is perfect for identifying a strong, reliable trend. So with what you can see on my chart, I have already the pro trading trend direction. This will give you the opportunity to understand how strong and reliable a trend is, and to know the momentum of the trend. So this is a good opportunity, because it will give you confidence in taking your trade. When you are taking a trade, you will feel highly confident in your trading, because you know already the direction is already clarified, and the strength of the current trend and the level of the trend. So without wasting much time, let's dive in. The pro trading trend direction indicator is a powerful tool which is designed to help every trader of every category, whether you are a beginner or you are a professional trader, to spot out a good trend, and also to know when there is a reversal in the market. So from what you can see on charts, you see at this very particular point, there is a switch from the color of the indicator, change from red to blue. So this direction at this point has already pinpointed to you that we are now moving from downward trend to upward trend. So from this level on the chart, you need to know that you are currently dealing with an upward direction in the market. And why we'll be using a pro trading trend direction to spot out the trend of the market, we'll be using the pro trading oscillator to know when to enter the market. From what you can see on my chart, the pro trading oscillator will give us these arrows. So this arrow pointing up is the time is telling us this is an opportunity for us to buy the market, and this point at this point. And when you are getting the arrows pointing down, these are moments when it's giving you the opportunity to sell the market. But we'll be explaining this to understand when we have a valid buy and a valid sell signal. So first you need to add this indicator to your chart, and the process of adding the indicator to your chart is very simple. All you need is go down to the description box of this video. You see the two links. Copy the link and paste it on your browser. Once you paste the link on your browser, you will get the pro trading trend direction. Or once you get this button here, I've already added this to my chart. You click on this button, it will add the indicator to your favorites. Also, the same way, you copy and paste the link for pro trading oscillator. You will get the button and you add it to your favorites. Once that is done, you go to your TradingView account where you see the indicator. You click on the indicator button. You'll be able to see the two indicators added to your account. All you need is to click on them and they will be added to your chart. So once these two indicators are added to your chart, for me, if you want, you can modify the settings, but for me, I'll be using the default settings as they are working very well for me. So this strategy works well for me on 1 hour time frame, so I'll be sticking to 1 hour time frame for this strategy. So how do we approach the market using this strategy? The process is straightforward. The first thing we do is to understand the directional bias in the market. You can see from this region, you see that the blue color of the histogram for this pro trading trend direction is giving us the direction that the trend is currently upward. And so long as it's telling us that the trend is upward, we continue to be in an upward trend. We continue to maintain that direction, and when we get a signal that the trend has changed, from here you see that at this point it's telling us that the trend has changed from upward to downward trend. So from this moment, all we do is to concentrate only on a downward direction. So that is how you are going to use the pro trading trend direction. The next indicator, which is the pro trading oscillator, which gives us our sell and buy signal. First, as I said, once you get at this point that the pro trading trend direction has given you already an upward trend, from this time, then you start looking for opportunity from the pro trading oscillator, which is the upper histogram. So here, when you get this arrow, you know that this is an opportunity for you to buy the market. So this is how you will be following this strategy. So let's look at a couple of examples to understand how this strategy works in real charts. So here we are currently in an uptrend, and from this point, at this very particular point here, you get this arrow pointing up, so which is here. So once the indicator shows this arrow and the candle is closed, this is the point when you enter your trade, and your stop loss is going to be the immediate swing low for a buy trend. For a sell, is going to be the immediate swing high. But now we are considering a buy market, so once you open your trade here, your stop loss will be the immediate swing low. And when you have this, the distance which you have here, let's take for example, this is 10 pips. Our target is 1:3. So you'll be targeting 30 pips in this case. So this is how we are going to be following this strategy. And one thing again is that here you see at this very particular point, you get this signal here. When you get this signal, there are two folds. We'll be using following this oscillator to navigate the market and managing our trade, following our take profits. So we'll not be exiting the market when we get this oscillator pointing in the opposite direction. We will not re-enter the trade when we are still in the current trade and our market has not hit the take profit. So these two things you need to be aware. Once you enter the market, you put your stop loss, you put your take profit. All you need is to stay in the market and be managing your trade. As the trend is moving in your direction, you will be managing your trade until your take profit is hit or you are stopped out based on moving your trailing stop. In this example here, we can see a clear sell signal being generated at this point. It means we are moving from an upward trend to downward trend. So once we have this, we know that we have transitioned from buying to selling the market. And here you have three range of these sell signals. The first signal is the one we are going to take, and which happens here. So once this candle close here, we open our trade. Our stop loss is going to be the immediate swing high, and our take profit is going to be 3 times 1:3. So if we are taking here, from here is 20 pips, we are going to be targeting 60 pips. So once we hit the 60 pips, we have taken our profit and we look for another signal. From here again, you see that at this point this trade is a winner. We have made our profit, and here you get another signal which happens at the close of this candle. So once this candle close, we open our sell trade here. So when we open our sell trade here, our stop loss will be at this immediate swing high. Our take profit is going to be 3 times our risk. So if we are risking here 30 pips, our take profit is going to be 90 pips. So we put our take profit and we'll be managing the trade. We will not take any of these sell signals which are coming here. We'll just be managing our current trade and be moving with the trend. Here is another example of a buy trade which happens on United States dollar against Canadian dollar. So here you have, from this point we move from downward trend to upward trend. So this is the point where we know that we have transitioned to a buying market. So here we'll be looking for opportunity. This is the first buy signal which we have on the chart. So here at the close of this candle here, we open our buy trade and our stop loss will be at this immediate swing low. Our take profits will be 1:3. So if we are risking here 40 pips, so our take profit is going to be 120 pips. So we'll continue to manage this trade. As the trade is moving, we'll continue to follow the market until our take profit is hit. Again, here you see you have this is a United States dollar against a Swiss franc. You have here at this point you get a transition that the pro trading trend direction, the trend has changed from downward trend to upward trend, and you see now you start looking for opportunity to buy the market. As you can see, this strategy works on different asset classes, so it doesn't really mean for any particular currency. It works on different currency pairs. Here you get your first signal. At this point, once this candle close, here you open your buy trade. Your stop loss is immediate swing low. So here you put your stop loss and your take profit. The risk to reward ratio is going to be 1:3. So you know that if you are having here if this point you are taking a stop loss is 10 pips, you will be targeting here 30 pips. Once our 30 pips is hit, this is the point we take our profit and we wait for new signal. And this is hit. Then here again you have another signal here which gives us a buy signal, and once this candle close here, this is the point where we open, and this is within the immediate low. So the next swing low is at this point. This is where you have the next swing low. So here you open the trade and you make sure you take your risk. If your risk here is 20 pips, so your take profit at this point should be 60 pips. So this is how you continue to manage your trade. Again, here is another example. This currency is Australian dollar against the US dollar. At this point, we transition from uptrend to downward trend, which is clearly seen here. And once you have this is the point in the market where we get this transition. All you need is to wait for a new signal, and this point we get a signal at the close of this candle. Here you open your sell trade and your swing high is here. So this is the point where you open your sell trade. Your take profit is 1:3. So 1:3. So if your stop loss here is 40 pips, we'll be targeting here 120 pips. And this is how to trade successfully using a pro trading trend direction and the pro trading oscillator, combining the two together to spot out the trend and be able to capture the market with a good profit and good risk reward ratio. So remember to always understand that you must maintain your stop loss, because sometimes the market might go against you, so that when you lose, your loss is going to be very minimal, because you are winning more. You see, when you win, you are going to win ×3 of what you risk. So this is a very nice opportunity to maintain in the market. If you find this video very helpful, don't forget to hit the like button and subscribe to our channel if you have not subscribed, and leave a comment in the comment box below. Ask any question. If you need any clarification, drop us a comment. We'll be happy to help you. Check out the links in the description. You'll see more videos which we have shared on our channel in order to learn more about trading the market profitably. Thank you for watching, and see you next time. Hello traders, welcome back to my channel. In today's video, I'm going to introduce another powerful trading strategy which we just developed, and this trading strategy will really transform your trading, and if you can follow it very judiciously, you will be able to profit from the market in a very massive way. The indicator which will form our major strategy today that I'll be discussing with you is one of our newly developed indicator, which is a pro trading intraday buy and sell indicator. If you are looking for a clear buy and sell signal to navigate the financial markets, I believe this video is really for you. So what exactly is a pro trading intraday buy and sell indicator? Essentially, this indicator is really designed to help individuals trading the financial market, whether Forex, indices, or crypto, or any asset class which you prefer to trade. It will help you to identify high probability opportunities in the market for buying and selling any of the asset classes. And it will really be a very good opportunity because it's based on price action and technical movement in the market. So this is something that is very nice, that you'll be able to understand how to follow it and how to use it. The way this indicator works is that it helps you to analyze it, go in a way that it will analyze the market momentum and the market condition at every given particular point in time, and based on the market momentum and the market movement, it will be able to give you a precise real-time buy and sell signal in any of the asset class which you are trading. So the signals will appear as a triangular arrow, okay, directly on the chart, which will be visible, and it will help you to pinpoint the actual time and when to enter the market and also when to exit the market. So this beautiful indicator is very simply is a simple indicator which will remove every form of guesswork in your trading, and that will give you the opportunity to be able to profit well from the markets. Let's break down how this indicator works and how the whole trading strategy that we are looking at today is going to be utilized. The pro trading intraday buy and sell indicator, which is our focal point on this strategy, uses a combination of technical analysis method based on moving average, which is our underlying indicator that gives us the directional bias, because as you know, what we first to identify in every market, in every asset class we try to trade, is to know where the opportunity lies for us, so that we will be able to capitalize on the market. So the moving average will give us the clear directional bias, so we know which direction we need to focus. So it's one of the main components of this indicator. Then we'll be looking at the momentum aspect of the indicator, which will give us the arrows for us to know the exact point to enter the market, and also the price action component of the indicator will help us to understand when exactly we need to understand that the market has gotten to a kind of equilibrium point, so we'll be able to move our stop or take our profits and reassess the market. Here is a perfect example of how this trading strategy works. So these are green triangular arrows you see indicates a buy signal, meaning that it is time to go long, because when you look at on the chart, you will see that the moving average has already given us a direction, okay, at this point to go long. And now that we have this arrow pointing in the same direction, this is an opportunity for us to go long. And also you have some instance where you have the arrow already pointing in the direction to go long in that case, and after that you get a confirmation once you have the moving average confirming the same direction as the arrow component of this strategy. So this also is an opportunity to go long. Also in the opposite direction, over here you will see that the arrows are showing a red. This is a point for a sell signal, which indicates opportunity to exit the market if it was in a buy territory, or opportunity to enter a sell trade when we get the moving average pointing us in a downward direction. So these are the two ways that you will be looking at this strategy and how you will be handling it in order to use it to enter the market. The goal here is to capture profits within the movement of this market, then and ride on the short trend and the long trend depending on how the market reacts, and be able to capitalize on the market. Now that you know how this works, Let me show you how to apply this indicator to your own trading platform. First, head over to the description box of this video. You will see the link to download the indicator. Copy that link, paste it on your browser, and you are going to see the button to click in order to add this indicator to your TradingView account. Once you have done that, the next thing is click on the indicator tab of TradingView. Once your account is you logged into your TradingView account, click on the indicator tab, so you'll be able to see this indicator called Pro Trading Intraday Buy and Sell. Once you see the indicator, click on it, then the indicator will be added to your chart, and you will instantly see the buy and sell signal appear in real time on your chart as the market is moving. But always remember that no matter how a trading strategy works, it is very important to always take precaution when you are trading the market. It is important to combine this strategy with a good risk management. Remember, no indicator is 100% accurate, and no trading strategy is 100% accurate either. So always use a proper stop loss level so that it will be easier for you to navigate in the market, because using a good risk to reward ratio will keep you in the market for the long run. So this is a very nice point to always bear in mind. Here, for instance, after receiving a buy signal, I just have to set up my stop loss in the previous level, where you can see at this point, if you set up your stop loss here, it will be easier that if in case the market goes against you, which happens from time to time, you will be able to take a minimal loss from the market. But when you win, as you see the position of the take profit, when you win, you are going to win a big amount from the market. So this is how you'll be able to maximize the profit potential in order to counter the little downside you will have from time to time. Now let's go through live examples, real life examples, and see how we can trade this strategy. As you can see, at this point we have this signal here pointing upward, and haven't seen that the moving average has already given us a clear indication that we are currently in an uptrend. So this is a clear buy signal. So based on this, you enter your long position at the close of this candle, and once you enter your long position, your stop loss should be at the low of this point, and your take profits for the initial time you enter the market should be 1:2. So if you are risking here 20 pips, your target should be 40 pips. So in another way is that once the trade moves in your direction, you start managing your trade. The moment you see that your trade is getting close to your take profits, and there is a clear momentum still showing in the market, you are getting consistent arrow pointing up, then you can move take a part of your profits and move your stop to the point where you ought to close the trade. Then the next thing is that you move your take profits up so that you will be able to continue to manage the trade. If you try this strategy, most of the time we use it to win very big from the market. Sometimes we make like 4R or 5R in a market, which you take a very good opportunity, and you'll be able to make something very nice from the market. In the same way, at this very particular point, you see that you are getting the arrow pointing downwards, and you can see after this, you see here, you have already gotten a clear signal with the moving average telling you that the trend has moved from upward to downward. So now you have a clear indication that you need to enter a sell trade. At the close of this candle, you open your sell trade, and your stop loss should be at this very particular point, okay, at the above part of the arrow. Then you make sure that you put your take profit at the initial point 1:2. So if the distance between your stop and where you enter the trade is 30 pips, your take profit at the initial point should be 60 pips. So once the market moves in your direction again, you have to keep managing your trade and moving your stop, so that you will get to the point where you are going to move your stop to the break even, or to the point where you are supposed to close the trade. And if you see more momentum in the market, you can remove or move your take profit further away, so that you'll be able to capitalize more from the market. So there you have it, the pro trading intraday buy and sell indicator. The strategy can be a game changer for your trading strategy, which is something that will help you to make a very good money from the market. By following this buy and sell signal, you can simplify your decision making process when you are looking at the charts, and this will make a more informed trade for you. So remember, though the key to consistent trading success is not just relying on any of the tool or strategy, but combine it with proper risk management, discipline, and have a solid plan when trading the market, because markets sometimes can trick you. It will look like price is about to go against you, and a lot of people will panic and close the trade, and all of a sudden they see that the trade now is moving in their direction. So this is something you need to bear in mind and always focus on it, because it's something that will make you money at the end of the day. If you find this video helpful, don't forget to give it a thumbs up, subscribe to our channel for more trading tips and tutorials like this. Hit the notification bell so you will never miss any of the new videos we are releasing. I wish you happy trading, and see you next time. Hello traders, welcome back to my channel. In today's video, I'll be sharing with you another exciting strategy which we'll be going through in a systematic way. And this strategy is going to be combining indicators which are giving you the market structures, which is more or less a price action in the market. And with this, you'll be able to understand how to utilize the indicator and how to adapt it with the current market actions, because you know market deals with the price, and price is what evolves in the market. And if you are able to understand this indicator, it will be really a good advantage for you to understand how to go about trading the market in a profitable manner. The first indicator which we'll be looking at is just quickly go to here and search for RMI Trend Sniper. The RMI Trend Sniper indicator is what will give us the hint about the market, what to do in the market, whether we are going to buy or to sell. So first, add the RMI Trend Sniper. That is the indicator which will give you this red color with the blue color. So when the color of the RMI Trend Sniper is showing a red, it means we are in a downward direction, which is a sell territory, and we'll be combining this, and when the color change from red to blue, it means we are now in an uptrend, which is a buy territory. And you can see the indicator is not really moving in a straight way. It goes with the price and respect the price and still continue. You see from here it moves to this point, then come down to this area, then still continue moving up. The direction is still telling us that we are currently in an uptrend. So you don't do any selling in this region for this currency pair. Only thing you do is you focus mainly on uptrend, which is buying the market. So we'll be combining this with a market structure break. So go to the same indicator area for TradingView. You add this market structure break, okay, by Enrique B. So this is the one you need to add to your chart. And when you add this to your chart, you don't make any modification on these two indicators. Use the default, because we have discovered that the default settings are working perfectly well. So these indicators will give you these lines which you see on the chart. When you get if you are in a downward trend, you will get a red. So these are telling us about the market structures. So for those of you who don't know much about the market structures, these are the buying regions in the market based on the movement in the market and how the price is moving. So whenever you have this kind of move in the market, this is another block. Okay, this region is another block. So it gives us hints that price will definitely come back to fill this other block, because there are a lot of pending orders within this region because of this price moving in this direction. So this will help us to know which are the regions where we should better place our trade. So for this, how we'll be utilizing these strategies that you see for this currency pair, which is US dollar, Japanese yen, at this very particular point, once we get 4 to 5 candlesticks testing a particular region without breaking that region to go up or down, is going to form an order block. So it means there are a lot of buying pressure or selling pressure in that very particular region. So for here, there is a lot of selling pressure here, which has made the price not to be able to move. So you see, so at this very particular point, once you have this continuous hitting on this point without breaking it, as the price move below this market structure, this is the point at which you place your sell trade. Okay, this is the point you place your sell trade. So, but what we do in order not to be placing a blind sell trade or buy trade, we wait to capitalize on the market. So for us, we wait to have a good edge in the market. We wait for when the RMI trend sniper gives us an indication to sell in this particular market. So at this point, we get the signal to sell the market. So this is the point at which we open the sell trade, and you can see the market moves in a very well manner, and you're able to make a very good opportunity from this trade. Where do you place your stop? Your stop is slightly above this market structure, because once you get the price breaking this, it means the trend has changed. The price, it means the market is now moving in a different direction. So it's an opportunity for you to exit the market. But if you are someone who is an aggressive trader, at this point, this is an opportunity for you to enter the market without waiting for the RMI trend sniper to give you signal for the market. Again, you come to this very particular point. You see here, you are getting the same order block. So at this point, you see that price has already broken this. So what do? you don't jump into this market, you wait for price to come back to retest the order block. Because if this is truly a strong order block, the price will come back and retest it and still push down. So here price come back, the first candle hits, the second one, the third one, the fourth one. You see the fifth candle move away from there. So this is an opportunity again for you to re-enter the market and come down to this point again. You see price break below, and here there is another order block which happens on this candle, and you see here price come back again and retest it. This is a very nice opportunity again for anybody who is interested or currently in this market to enter a very good sell trade, because now the order block has been retested again and price is pushing going down in the direction of the current trend. You can see, despite the fact that there is news that came out at this very particular candle, you see it pushed price up to this point and they still move down. This is to tell you that price is the real action in the market, because this price, these candlesticks you see, this represent the traders in the market, giving different probability of where the market is going to move. This is another example, British pound against US dollar. So you see here, price was hitting at this very particular point, and there is a very big resistance at this particular point, and the moment price break above, this order block was formed. There is a market structure within this region, and this becomes our base for this particular time. And the moment we get this signal here, which happens on this candle, so once this candle close, we open our buy trade and we place our stop here and we allow the trade to run. Once we make a 2-to-1 of our risk, we allow the rest and move our stop loss to break even and allow the market to move. And you can see the market is still moving up. So we continue to trail the stop and moving with every particular swing in the market. And we'll be trailing our stop as the market is moving, we'll be trailing our stop. Here is another example. This is a euro against a Japanese yen. You see here there is a market structure formed at this very particular point, and you see these two candles, they hit on this and they were rejected. Here you see at this point there is a market structure which is formed, and you see the price has been pushed because these are resistance points in the market. And you see again price come into here. This is the current market which is ongoing now, hits here 4 times and price is rejected. Once you see this rejection from the price, this is the time for you to take opportunity and enter the trade. Your target should be the next market structure, which is close at that particular point in time. So once you get to this point, then this is the point for you to take your profit or move your stop to break even, depending on the strategy of how you want to manage your trade. So once price succeed in breaking below this very particular market structure, what do? We wait to see a retest. Once we get a retest within this market structure, so once you have a retest, that candle come to this point and they were not able to break above, instead they close below. This is another point at which you enter the market and continue to ride with the trend. If price succeed to close above this very particular market structure, this is an opportunity because the gap between these two market structures are very close. We wait to see if market will have the momentum to close above this particular market structure. Once this is closed, for aggressive traders, you can enter the market considering that your RMI has already given you indication that market is going to move up. For those who are conservative in taking the trade, you wait for this to come back and retest this very particular market structure. Once this retest is done and price close above this, this is the point at which you enter the trade and you move with the trend. Here is also another example. You have here the RMI trend sniper has already given indication that price is going to move down, but we don't enter the trade yet. We see that there is a market structure which has formed and price tried to break but was not able to break but closed below. At the close of this candle, this is the point at which we enter the sell. So you see in this, where you place your stop is slightly above this market structure. So this will give you a very good opportunity in this trade. You can make like 1 to 4 R in this particular trade. So here again, you see market try to come back and get to this other block. Again, it was resisted and pushed down. When this price is closed, if you are an aggressive trader, this is opportunity to enter. But if you are a conservative trader, you wait to get another signal from the RMI. Here you get a signal, and here is the point at which you enter the market. So I believe by now you understand how this strategy works. This gold, you have here the RMI indicator has already given you hints that the market is going to go up, which means you are only considering to buy. And here you have the market structure created in the market, and you see price was moving inside. At this point, you don't do anything. The moment you have this break here, so once the price break above the market structure, this is the point at which you enter your trade. And in this particular instance, you place your stop slightly below this point, and you see the indicator is still telling you, the RMI indicator is still telling you that the price is going to go up. So you will continue to hold your trade. We're expecting that this price will slightly and will continue to trend in the upward direction. This strategy works in all asset classes. This is silver. You see here you have another block at this point. The price tried to break, but here you have a conflicting signal because the RMI indicator is telling you that the price is going to go down. So you don't do anything. Here you get an upward confirmation from the RMI indicator that the price is going to go up. And you have here a market structure, and this market structure at this point was broken on this candle. So once this candle is closed here, this is the point at which you open your buy trade. Okay, then your stop should be below the market structure which was formed. So you continue to ride on the trend, and this is still telling us that the price is going to go up. So I believe you have a clear confirmation on how to use this strategy. In case if you are confused at any point, drop the comment in the comment box below. If you have not subscribed to our channel, please try to subscribe. If you are enjoying our content, give us a thumbs up, like and share the videos so that other people can also enjoy what we are sharing on this channel, and we wish you happy trading. Hello traders, welcome back to my channel. In today's video, I'm going to share with you an exciting strategy which you can use to trade the stock market. This strategy will work in Amazon. We have tested it in Amazon, we have tested it in Nevada, Microsoft, Google, all these stocks. It will work very well, and the strategy is very simple that you can easily follow it methodologically. This is a technical strategy, so you need to understand the strategy, then you follow it accordingly, and you will be able to profit from the market. So in this strategy, we are going to be using 2 indicators which we have just created, and these 2 indicators are here on the chart. Just you will see the link on the description, and the link is also, you can also get this indicator from our website. So they are available. All you need is just copy the link and paste it on your browser, then you can easily add it to your chart. So these are simple indicators. Let me explain to you what these 2 indicators are doing. You can see here we have the first indicator is here, the Pro Trading Adaptive Trend Sniper. So what this indicator is basically doing is that is the indicator that gives us the direction of the market. So when the color of the indicator is from here, you see the color change from blue to red. So from this point, you see, if you put your cursor here, you can see that the candles are telling you that we are currently in a downtrend. So these are the features that comes with this indicator. So you see, once you are in a downtrend, you don't need to take any buy trade. So this is one thing to always keep in mind, because if you are not following the direction of the market at every given particular point in time, you will be making some wrong trade, so which will lead to losing money to the market. So you need to understand these points. First, you need to identify which direction is the market moving, because these candles you see on the chart, these represent different traders, you and everyone who is trading in the market. The decisions we are making, the emotions we are putting in the market, these are what represents here on the candlesticks. So first, identify the direction of the trend, then it will be easier for you to follow the next step of the strategy. So once you identify the direction, you know that when it's red, you are currently in a downtrend, so you can only make a sell trade decision. When the color changes to blue, you know that you are currently in an uptrend, and at that point you can only make buy decision. With that being said, the next indicator is our Pro Trading support and resistance breakout. So the support and resistance breakout has 2 signal features. Okay, so one is this arrow which you see on the chart. When you see this big arrow, this indicates that the buying momentum in this case at this point is very strong. So it's an opportunity for you to take a buy trade, having understand that already you are currently in an uptrend. So these levels which you see on the chart, the red is telling you that is a resistance level. So which means when price is getting to the resistance point, you should expect some level of resistance in the market, because these are dynamic resistance which are already being identified from the market based on the historic calculations being made by this indicator. So this indicator is very strong, and if you follow it, you should be able to understand how to avoid some areas which will make you to lose money from the market. So once you get this arrow telling you that is an opportunity for you to buy, this is the point at which, once this candle finish, this is the point where you need to enter the trade. So from here, the moment this candle is closed, you need to enter your buy trade, because you have already identified that the trend is moving up. So once you enter your buy trade, your stop loss should be below this point. So if you are somebody who is a swing trader, some traders will want to put their stop loss below the support which was preceding the signal. But knowing that you have this line of margin between these points, these two areas are also good for you to place your stop loss. But for the strategy, we are taking our stop slightly below the arrow, so that if we are wrong in a trade, because not every trade you are going to win, in some trade you are going to lose. That is how the market plays out. Trading is a game of probability, so no matter how the signal or the strategy or the indicator is, sometimes you are going to lose in the market. So always bear this in mind, because a lot of people tend to complain that they lose with the strategy. Every strategy, there is no strategy in the whole wide world that does not lose trade. At some point, the strategy will lose, but how you manage your trade and how you're able to follow the strategy is what makes you to be profitable from the market. So once you enter your trade at this point, your stop is slightly below the arrow, which gives you the signal, and your take profit is 1 to 1.5. So if this point you are risking 10 pips, so your take profit should be 15 pips. So this is how we trade with this strategy. So you see here, before this line, this point was previously a resistance point. This was formerly a resistance point. But once this resistance is broken, the resistance does not disappear from the chart immediately. When it's broken and it's retested, it turns that you are going to get this signal, break resistance. So it means that this resistance has been broken. This is an opportunity again for you to enter the market, because it means that this very particular point has proven to be a point of entry. So if you enter at this point, your stop also should be below this signal point, and your take profit for this, because this is a signal which you are getting when you have already opened your first signal. So once you enter this, your stop should be 1 to 1, because this you are just adding to the existing trade which you have already made. So if you enter this, if your take profit, if your stop loss from this point at which this break was confirmed, here is 10, your take profit should be 10 pips as well, because this is not your original trade. This is a trade which you are entering when you have already opened your existing trade. And your existing trade at this very, very particular resistance point, you must have closed your existing trade here. So this is just an added advantage using this strategy. So for a sell trade, you see at this very particular point, you have the color of the indicator change from blue to red. So this is the point where you identified that you have a sell opportunity in the market. So this is the point where you have a sell opportunity in the market. But at this point, you are not going to enter this trade. You need to wait for you to get a confirmed signal. And at that point, this was a former support in the market. This very particular level was a support in the market. But you see, this candle break below the support. So this support has been broken. The moment the support has been broken, the support automatically turns to resistance. Okay, you see the support color has changed from formerly it was green color, which was a support, but now it has changed to red. So this is now a resistance point. So in this case, you open your trade at this very particular point. Then your stop is at this level. So in this trade, once you enter your trade here, this is the point where you place your stop loss. Okay, here you have your stop loss, and your take profit is 1 to 1.5. okay, so your take profit is 1:1.5. so this is the first trade which you are taking for this signal. So your take profit is 1:1.5. so if you are risking from this point here, with our example 10 pips, so this point your take profit should be 15 pips. So you see here at this point you get an opposite signal here telling you to buy. This is against the trend, so you don't take this trade. You don't take this trade because this is against the trend. You ignore this trade, and here again you get another signal telling you to sell the market. So this is a confirmed trade, but this is a second trade which you are taking on this signal. So here, if you take this trade, here is the point where you place your stop loss. Your take profit for this particular trade, because this is the second trade, is 1 to 1. So if you are risking here 10 pips, your target should from here with this area where you open the trade. In this trade, the original trade was still running, but within this region, your 1.5 must have been hit within this region. So that being said, you know that you are taking the second trade, so your take profit at this second trade is 1 to 1. So if you are risking 10 pips, you should be able to target to make 10 pips. Here again, you get another signal here, okay, telling you to sell. So you enter this trade again on this because it's confirming with the main trend. Your target, this is the point where you place your stop loss, and this is the point where you open your trade. Your stop loss is also 1 to 1. This is, you are joining this, adding this to your existing trade. So here is 1 to 1. So if you calculate the profit you must have made from this trade, you will see that it will be adding up quickly to your account. So this is how you manage your trade with this strategy. Make sure that your stop, you don't move it no matter what. Maintain your stop line, maintain the levels where you take your stop, and maintain the take profits. Don't put large take profits because trade might not get there. Based on this strategy, it doesn't require long take profits. Okay, this is a Microsoft stock. So you see here from this point you get a signal telling you that currently we are moving to an uptrend. But if you see in this signal, there is no any signal given based on our strategy. So if you move back, when you move back here, you will see that at this very particular point in the market, we get a signal telling us that the trend is moving from uptrend to downtrend. So this is where we get our signal, but we don't enter this trade until we get a confirmed signal. This point here is the point where we get the first signal. Here you see this was an opposite signal which you need to ignore because this is against the trend. So this will help you to filter out a lot of bad trade, which ordinarily, if you just follow the arrow, you will not be able to make anything from the market because you'll be getting stopped out. So here you get a confirmed signal going with the direction that we are currently in a downtrend. So once this candle is closed, you open your sell trade. Your stop loss always just slightly above this your break, so which is the point where you enter your trade. So this once you enter this, your next point of target is 1 to 1.5. So you maintain your trade. Your target is 1 to 1.5. So here, if you are risking again 10 pips, your target should be 15 pips. So this is how you follow this. Here again, at this point, you get another signal telling you to sell, and the rest of the signals are still pointing downwards. You enter this trade at this point. Here is your stop loss, is ratio 1 to 1. So if you are risking again, if from here to here is 10 pips, so your target for this point should be 10 pips. Here at this point again, you get another signal telling you that this is an opportunity for you to sell the market. You open your trade here. Here is the point where you place your stop loss. Your target again for this point is 1 to 1. So from here you see there is no any other signal, so we just wait to see if we can get any other signal from the market. So this is a very nice opportunity, and I will advise that first try to use this on a demo account. Don't just put this on a live market. Try to experiment with it. Leave a comment in the description box below. Ask your question. If you are not clear with any part of the strategy, ask questions. We will guide you, provide you more details if required. But try to do this, use this in a demo account to master it and be able to follow it accordingly. I wish you happy trading. Hello traders, welcome back to my channel. In today's video, I'm going to share with you another strategy which you can use to trade the Forex market. And this strategy, you can use it to trade any asset class, whether being crypto or indices or stock. No matter the asset class which you prefer to trade, you can use it to trade it. And this indicator and strategy which we'll be explaining will work better on 1 hour time frame. That does not mean that you cannot use it on any other time frame, but we see that the optimal performance of this strategy works better on 1 hour time frame. With that being said, let's move in and see how this indicator looks like. The first indicator which we will be sharing today is our pro trading entry signal. So the pro trading entry signal indicator has a combination of moving averages being optimized to work as a trend detecting indicator. So it helps us to filter out multiple fluctuations in the market. So whenever we get a signal using this indicator, we know that we are having a clear signal of what is actually happening in the market. So this helps us to be on the right side of the market, because you know, trading the market and being on the right side of the market is what gives us the opportunity to make money from the market. So from what you can see, when we have this indicator on the charts, you see that clearly you'll be able to know that the price is below the indicators, indicating that we are currently in a downtrend. And when you have the prices or the price coming out from the market are trading above the indicator, this gives you a clear direction that you are currently in an uptrend. So this is the biggest thing that you need to identify in every market, in every asset class which you intend to trade at any particular point in time. So having said this, the second indicator which we are going to look at is our pro trading oscillator. The pro trading oscillator is the indicator that gives us a crystal clear buy and sell signal. So whenever this indicator gives us a buy and sell signal, we see it as a clear point for us to enter the market. So when you see on this indicator, you can see here you have this red arrow pointing down. So this is the point where the indicator is giving you a sell signal. And here you have the blue arrow pointing up. This is the point where the indicator is giving you a buy signal. So how do we use this indicator? First, for you to get this indicator, just go to the description box below. There, copy the link for the two indicators, paste it on your browser. Once you paste this link on your browser, you will be able to see the button to add the indicator to your trading account. Once the indicator is added to your trading account, the next thing you do is you simply go to indicator on your TradingView account, click on the indicator, you see it on your favorites. So the indicator will be added to your favorite account. So you will see it like this. You are going to see the two indicators showing on your favorite. Click on them, then you can add them to your chart as what you have here on my chart. So once you have this, it is now the point for us to understand how to use these two indicators to formulate our strategy. So from what I've explained previously, if you look on this chart, this is a Canadian dollar against a Japanese yen. So here you have, this is a 200-day moving average, okay? And the green is 100-day exponential moving average, and the blue is a 50 exponential moving average. So when the 50 cross the 200, cross the 100, and 100 cross the 200, from this very particular point, you see that you have identified a downward trend. This is the point where you get your downward trend. So once you have this, from this point, you know that you are currently in a downward market, which means you can only take a sell signal. You don't have anything to do with the buy signal. So whenever you get a sell signal from the oscillator, this is the point to take your sell signal. We'll be taking the trade based on two different levels. When the price is below the 200 and is below the 100 and also below the 50, at this point, when we get a signal like this, what we have here, we take the signal because this meets our criteria. Price is currently trading below all the exponential moving averages. So this point we can take our trade. And when another level again where we can take our trade is when price is below 100, which is this, but the price is above 50. Between this 50 and 100, when we get a signal and price is between this range, we can take the signal. But when price is between 200 and 100 EMA, we get a signal at this point. We will not take the signal because this signal has already breached our threshold. So any price that is trading within between 100 and 200 is not a valid market signal anymore, because it means the market is currently moving, trying to test the maximum resistance in the market. So you see at this point you have this signal here. From what you see here, you have a signal, but if you look, the price is trading here within this zone. So once the price is within this upper zone, it means we are no longer in a safe area, because if we take any trade here, there is no local point for us to put our stop loss. So this is not a valid trade. We will not take this kind of trade because it's against the rule of this strategy. But signal here you have a signal here which is within this range 150 exponential moving average. This is a valid signal for us to take. On the other way around, for a buy signal, we need to have the 50 cross the 200 and cross the 100, and 100 is above 200. Once we have the signal here generated, this gives us opportunity to only consider a buy trade, because from this region it means price is now moving upward, and you can see that the price is trading above all the moving averages. So any signal we get from this region is a valid signal for a buy trade in that case. I hope you are following my explanation. From what I've explained, you see here you have this signal here generated on the oscillator. This is a signal telling us to sell the market. But if you look on the chart, price is currently trading above the moving averages. So this is an invalid signal. We will not take this signal for us to enter the market. Here again, you have here a signal telling you to sell the market because currently you are in a downtrend. But if you go back to the chart, you will see that price is currently above between 200 and 100 exponential moving averages. So this is not a valid signal. So you are not going to take this signal. So this is invalid. Coming back to this point, you see that here you have signal here to sell the market, and if you look here currently, you will see that here is the signal. So here is the signal. If you see, this is the candle which gives us the signal. So the candle is between 100 and 50 exponential moving average. So this is a valid signal. So once we have a clear valid signal like this, we take the trade at the close of the candle. Our stop loss is on the next exponential moving average, which is 200 in this case, because the price is between 100 and 50. So the target which we have for this is 1 to 1.5. So if here at this point we are risking 20 pips, here our target will be 30 pips. The point where if our take profit is not reached and we get an opposite signal, once we get an opposite signal at this point, we exit the market to reassess and see if trade is going to give us a new signal. Here again, you have at this point, you see from this point, you have identified that you are currently moved from uptrend to downtrend. And here you get a signal to sell the market, because currently you can only sell the market from this cross. So here is the candle which gives us the signal here, and if you see, is below the moving averages, so it qualifies for us to take the sell trade. Once this candle closes, we open our sell trade. Because the price is below all the moving averages, the next moving average is this 100, the 50 EMA. So our stop loss will be on this 50 EMA, and our take profit is 1 to 1.5. So if we are risking here 10 pips, so our target in this case here will be 15 pips. You see, this trade was a winner, and this is the point where we hit the market. Here we're in that trade, and we get another signal here for a sell trade, and this meets our criteria because price is below this exponential moving average. So we take this trade, and this trade was also a winner. Here is a buy opportunity from the market. You see, from this point, this is the point when we get the cross. At this point, the moving averages were below the 200, but from here we have a cross of the 50 above the 200, haven't crossed already the 100 EMA, and here the 100 EMA crossed the 200 EMA. So this is the point when we get moving from downward trend to upward trend. So from here we are only looking for opportunity to buy the market. So if you look, you'll see that we check the oscillator here. The oscillator is giving us opportunity to buy the market, and this is the candle which is above all the moving averages. We open our buy trade, and this trade was against us, and here we were stopped out. But here we have another signal here, and the price closed between the 50 exponential moving average and 100 exponential moving average. So in this case we open our buy trade, and our stop loss is at this 200 because it's the next exponential moving average close to 100. So our target is 1 to 1.5, and this trade was also a winner. If you see at this point, you can see that the 50 is trading below 100, so there is no clear direction. This will also help you to filter out a lot of false signal from the market. You see within this region there is a conflicting between the exponential moving averages. So because here from this point you see the 50 was crisscrossing the 100, and here it crossed the 200, but 100 was still above, so there is no direction. From this point we have again another clear spread from the 3 exponential moving averages, and here we get a signal at this point that we should buy the market. And if you look from here, the price is currently above the exponential moving averages, so we take this opportunity. So this is how I believe you understand how you are going to use this trading strategy. It's very simple and very easy. You just have to follow it. Make sure that first you have all the criteria met. Okay, get your direction. Once you have your direction, then use the oscillator to filter out where you are going to take your trade, and you should be able to take a good trade and be able to make money from the market. I hope you like what we are sharing. Please try to support us by subscribing if you have not subscribed, and help us to like and share the videos so that other people will get to see the content and also benefit from it. I wish you happy trading. Hey, hello traders, welcome back to my channel. I hope you are doing great. I hope you are preparing for the new week. I believe you were able to capture some good profits from the last week trade, which was very super and very exciting because we captured a lot of nice trade, which was very good to see. And this week I'll be sharing another great strategy which is going to be useful for the community, and as far as the trading community is concerned, you will be able to benefit from this trading strategy in real time, because these are current markets which are happening now. You can see this currency pair, which is AUD JPY, giving a nice signals on the chart. So this is a very nice opportunity to capture some good trade from the market. So if you can understand this strategy, is something that will really help you to build your small account. Even if you have because I've gotten quite a few questions from people asking how much can they use to start trading. From my point of view, you can start first. Try to understand that the market is something that is very big. So first, I will advise you to start with a demo. Once you do demo trading for a couple of months, and you are able to understand the strategy which you are using, which we have shared quite a lot of strategies on this channel, then you will be able to start. You can start with as little as $100, and with that you'll be able to test the waters and be able to understand how to follow the market. So following the market comes with experience. As you know, in everything that one is doing in life, the more experience you have, the more you'll be able to build on what you are doing, and the more you'll be able to profit from the market. So in today's training, I'll be sharing with you this TradingView indicator called RMI Trend Sniper. So this indicator is available for free on TradingView. Whether you are using a free account or pro account, you can easily add this indicator to your chart. As you see on my chart, you just add the indicator, just take this name, search from indicator on TradingView, and you'll be able to add it to your trading chart. Leave the default settings, because the default settings are working very well. So with time, when you have more experience, you can try to tweak the settings, which is fine. So this black indicator, which is showing on the chart, is our entry fragas indicator. We are using a settings of 200-day moving average. So because we use the 200-day moving average for us to know the direction of the market. Once price is, as you see from this region, price is trading below the 200-day moving average. So this tells us that we are currently in a downtrend. Okay. So this is the first thing you need to understand in the market, because we are looking for edge in the market. Anytime you are analyzing the market, try to find the edge in the market, because the market is something that you cannot predict. We are all just making probability of the direction of the market. So the more you try to have an edge in the market, the more you'll be able to capture the opportunity that comes up in the market. So from here you see that once we have our entry fragas telling us that the 200-day moving average is above the price, so we have the confidence that we are currently in a downtrend. So once you are in a downtrend, you now move down to our indicator to take either a buy or a sell, which is our RMI Trend Sniper. So the RMI Trend Sniper will give you, when you have this red, when the indicator change from this blue, light blue to red, you know that you have already moved from up to down. So the blue giving you a buy signal, the red is giving you a sell signal, as you can see on the chart. So but once we know our directional bias, which is the 200-day entry fragas, so we know that we cannot take anything. Like here you have a buy, you cannot take this because this is a wrong signal, it's against the trend. But here at this point you get a sell signal. This is a very nice opportunity for you to enter the market at this point. Once you get this signal at this point, you enter the market. And how do you manage this trade? When you enter the market at the close of this candle, your stop loss will be at the edge of this signal. So, and your take profit is 1 to 3. In this strategy, we are taking a profit using 1 to 3. Okay, so if we are risking, for example, you are risking if the distance from here to this point is giving you 20 pips. Okay, if you have 20 pips at this point, so your target should be down 60. You'll be targeting 60 pips. So this is how we trade this strategy. So understand how you follow. You wait and make sure that first you have your entry flaggers telling you that the current trend is either up or down. In the current market, we are in a downtrend. So once you have this, all you need is to wait for the RMI trend sniper to give you a sell signal. Once you have this color change from light blue to red, you know that you are currently getting a sell signal. Then you open your sell and you place your stop. Because I've gotten a lot of queries regarding setting the stop, some people give a comment that they prefer to just open the trade and move with the trend. That is very dangerous because it's like opening your shop and you fail to lock it when you are not looking at the shop. Because when you place this trade, you can see price keep moving. There is no way you can glue to the chart to be monitoring the trade, and in the market something can erupt, any news can happen at any time, and you might see after analyzing the trade and everything is in your favor, all of a sudden the price will move against you. So if you don't have this, your stop loss is a very big risk in the market, because you can risk losing all you have made and also lose your capital. So also always ensure that you place your stop. So once you have your stop, your target should be 3 times your stop loss. So this is how you manage this trade. So let's just walk through to see. You see at this point you have the same signal you have at this current particular point. You have here the first indication is correct, that the EMA, okay, is giving you a sell opportunity. The EMA is giving you a sell opportunity. So the next thing you look is to get a sell opportunity from this RMI trend sniper. Once you have a sell opportunity from here, you open your sell and you place your stop at the edge of the signal and you ride with the trend. Then you see at this point again, you have the same scenario. You get your signal. Once you have this signal, you open your sell, you place your stop at this edge. Once you get opposite signal, we always advise, once you have opposite signal, exit the market. If you are not trailing your stop, try to exit the market, because you don't know what will happen in the market. At this very particular point, when we have this opposite signal, market can reverse from here and move against you. So if you just think that you can just open the trade and you leave it like that, that is very risky. It's very important to understand that, because making money from the market is one thing, is for you to have a good strategy. Another thing is for you to be able to manage your trade. If you are not able to manage your trade, you might have a very nice strategy, but you will still be losing money from the market. So let's have a look at another currency pair. This is a CAD JPY. You can see the same thing is playing out here. So from here, I like to look at the current market so that you understand how the market is moving. You see here you have the first signal, which is telling you that the EMA is giving you a sell signal. Now that you have the EMA giving you a sell signal, the next thing you look out is to see that you get a sell signal from this indicator, which is the RMI trend sniper. Once you have your sell signal from here, you open your sell trade, and as usual you place your stop here, and your target should be 1 to 3. Then again you see from here you get another signal here based on the same concept. You have your EMA already showing you that the current market is in a downward trend, and you have at this point that you are getting a signal from the RMI trend sniper giving you a sell signal. At the close of this candle, you open your sell trade, you place your stop here, your target 1 to 3. So your target should be around this point for this particular trade. Here you get a signal where you have this, which the price is above this moving average, and you can see clearly that this is up above the moving average, and you are moving in the proper direction of the current trend, looking at the trend from behind, and you continue to enter your trade. Once you have this signal here, the moment this candle close, you open your trade, you place your stop here, and you continue and place your take profit 1 to 3. So in this trade, you continue to move with the market. You see here again at this point, you get a signal for sell, okay, which is against the trend. And you see here the price is still above the moving average, which is clearly against the trend. And here you get a buy signal, which is in line with the trend, and here is your stop. So you open your trade at the close of the candle, which gives you the signal, and your take profit is 1 to 3. So in this trade we might end up with a break even. And this is where we emphasize much on managing your trade, because if you have placed a static stop without moving, trailing your stop as the market is moving, you can see that here there is a very big news which happens in the market. This is clearly what we emphasize. Maybe you are not watching the chart when this news happens. You see only one candle has already covered all the profits that you might have made from here. So this is why it's very important to manage your trade, because if you are managing trailing your stop as the market is moving in your direction, you are trailing your stop. When this news happens, which happens all of a sudden, you'll be able to capture some pip and you'll be stopped out on the way. So this is the best way to manage trade, and this is the best way to make money from the market, because not like looking at the charts, there are a lot of things that happens in the market. Emotion is there, having a psychological mindset to manage the trade is there. So these things are things you need to keep updates and you need to keep in touch with, so that you'll be able to understand how the market is moving and be able to capitalize on the advantages that come from the market. So I believe this strategy is very simple and is very easy for anyone to understand. In case if you are finding any challenge getting the strategy, just watch the video and pay attention. You'll be able to follow it. It's very simple. All you need is to make sure that you have your directional bias, so which we always emphasize on. This is the first thing you need to do. Make sure that you know whether the price, the current market is downtrend or the current market is uptrend. Once you identify your directional bias, so this will give you the opportunity to know which signal to take. Because if you are just taking any signal that comes on the market, you will lose touch with the market and you lose your money. So note this and you'll be able to utilize this strategy. Leave a comment in the comment box below. Tell us what you think and how you see this strategy. We'll be coming up with more strategies for the community to benefit from. but stick to any of the strategy which we have shared so far that you can really understand and will be able to benefit you in your trading journey. I wish you all the best in your trading. Thank you.